While everyone was panicking about silver crashing from $34 down to $28, the smart money was doing something completely different. They were buying aggressively, and there's a specific technical pattern that told them exactly when to strike. I'm about to show you the same signal they're using and why this pattern has predicted every major silver explosion for the past 15 years. Stay with me, because what I'm about to reveal could change everything you thought you knew about timing the silver market. Let's talk about what just happened. Silver had its worst single-day crash in over 2 years. In less than 60 minutes, $3 trillion evaporated from the precious metals market. Gold dropped 8.2%. Silver fell 12%. The crypto market imploded. Everyone's asking the same question. Is this the end of the silver bull run? Here's what the mainstream media won't tell you. This wasn't random. This wasn't just profit taking. This was an engineered shakeout, and it follows a pattern we've seen before every single time. 2008, 2011, 2020, and now 2026. The pattern is always the same. Massive rally, mainstream attention, retail investors pile in at the top, then boom, a coordinated sell-off that scares out weak hands. But here's the thing, and this is critical. Every single time this pattern has played out, silver has exploded to new all-time highs within 90 days. Make sure you smash that like button right now, drop a comment with your thoughts on silver's next move, and subscribe, because we're covering the silver market every single day. Let me show you the pattern everyone missed. It's called the Federal Reserve Conflict Indicator, and it's not something you'll find in your standard technical analysis handbook. This is institutional level intelligence that typically only hedge funds and sovereign wealth funds track. But I'm going to break it down for you in plain English. Here's how it works. Whenever there's a public conflict between the president and the Federal Reserve chairman, precious metals experience what's called a volatility spike. This happened in 2018 when Trump first went after Jerome Powell. Silver crashed from $17 to $14 in 3 days. Everyone thought it was over. 6 months later, silver hit $29, a 107% gain. Fast forward to last week. Trump publicly threatened to fire Jerome Powell after the Fed refused to cut interest rates. The announcement came at 8:45 p.m. Eastern Time. Within 60 minutes, silver crashed from $34 to $28. Gold lost $1 trillion in market cap. The entire precious metals sector went into free fall. But here's what the institutions know that retail investors don't. This conflict creates the perfect setup for the next leg up. Why? Because when the Federal Reserve's independence is threatened, the US dollar's credibility is questioned on the global stage. And when dollar credibility weakens, where does money flow? Straight into hard assets. Gold, silver, real estate, commodities. Right now, as I'm recording this, Trump has already announced Jerome Powell's replacement. His name is Kevin Warsh. And here's the key detail. Warsh is a known crypto supporter and low interest rate advocate. Translation: the Fed is about to pivot dovish. Interest rates are coming down, and when rates drop, precious metals soar. Now, let me show you the technical setup that has every institutional trader salivating right now. Silver just tested a critical support level at $28. This is the same level that held during the September 2025 correction. That correction led to a 43% rally over the next 4 months. Look at the RSI. We're sitting at 28.5. That's oversold territory. The last time silver's RSI dropped below 30 was October 2023, right before it rallied from $21 to $32, a 52% gain in 7 months. The commitment of traders data just came out and it's showing something fascinating. Commercial hedgers, the smart money, increased their long positions by 18% during last week's crash. These are the mining companies, the industrial users, the entities that actually use physical silver. They're buying the dip. Meanwhile, the speculative shorts, the traders betting against silver, just hit their highest level since 2020. You know what happened after that? Silver went from $18 to $30 in 9 months. Here's the pattern that always predicts the explosion. 3 conditions must be met. Number 1, a Federal Reserve policy conflict that creates dollar uncertainty. Check. We have that right now with Trump versus Powell. Number 2, RSI below 30 on the daily chart. Check. We hit 28.5 last week. Number 3, commercial hedges increasing long positions while speculators max out shorts. Check. The COT data confirms this perfectly. Every single time these 3 conditions align, silver explodes within 60 to 90 days. 2008, 94% rally. 2011, 168% rally. 2020, 67% rally. The average, 109% gains. Before we continue, smash that like button if you're finding this valuable. Drop a comment letting me know if you're buying this dip, and make sure you're subscribed because we're tracking every development in the silver market. Let's zoom out and look at the macro picture because this is where it gets really interesting. The reason this pattern works isn't just technical, it's fundamental. The global silver market is in a structural deficit. That means we're consuming more silver than we're producing. The Silver Institute reported a 215 million ounce deficit last year. That's the largest deficit on record. Industrial demand is exploding. Solar panels require massive amounts of silver. Each panel uses approximately 20 grams. Global solar installations are projected to triple by 2030. Electric vehicles use twice as much silver as traditional cars. 5G infrastructure requires 34% more silver than 4G. We're talking about irreplaceable industrial demand that's growing exponentially. Meanwhile, supply is shrinking. Primary silver mines are declining. Most silver comes as a byproduct of copper, lead, and zinc mining. When base metal prices fall, silver production drops. We're seeing mine closures in Mexico, Peru, and China, the 3 largest silver producing countries in the world. Now add in the investment demand. When the Federal Reserve cuts rates, which is exactly what Trump is positioning for with his new Fed chairman, investment flows into precious metals accelerate. We saw this in 2020 when rates went to 0. Silver went from $12 to $30 in 6 months. Bank of America just released a research note projecting silver could hit $50 by the end of 2026. Goldman Sachs has a target of $45. Andy Schechtman, one of the largest precious metals dealers in America, said on a recent interview that he's never seen physical demand this strong. Premiums on physical silver are running $4 to $6 over spot price. That's a clear indicator that the paper price doesn't reflect physical reality. Here's what's happening behind the scenes. The COMEX, the futures exchange where silver is traded, is experiencing delivery stress. In January alone, over 40 million ounces stood for delivery. That's physical silver being removed from the exchange. When available inventory drops, prices must rise to balance the market. It's basic supply and demand. So what is the smart money doing right now? They're accumulating quietly, aggressively. Let me give you some concrete examples. The largest silver ETF, SLV, saw inflows of $183 million last week during the crash. That's institutional money buying the panic. Retail investors were selling. Institutions were buying. Billionaire investor Eric Sprott just increased his silver holdings by 12%. Rick Rule, one of the most successful resource investors in history, said in a recent interview that silver under $30 is generational opportunity. These aren't random traders. These are people who have made fortunes timing precious metals cycles. The mining stocks are showing the same pattern. Pan American Silver, First Majestic, Hecla Mining, all of them saw insider buying during the crash. CEOs and board members using their own money to buy shares. That's a bullish signal you can't ignore. Insiders don't catch falling knives. They buy when they see value. Here's the specific strategy the institutions are using. They're dollar cost averaging into positions between $28 and $30. They're not trying to time the exact bottom. They're building positions knowing that when silver breaks out, it moves fast. The 2020 rally saw silver gain 47% in 6 weeks. If you're waiting for confirmation, you'll miss the first 20% of the move. The options market is telling the same story. Call options, bets that silver will rise with strike prices of $35 and $40 for March expiration, just saw open interest increase by 38%. That's traders positioning for a major move higher in the next 60 days. Make sure you smash that like button, comment your price target for silver, and subscribe for daily silver market updates. Let me give you the timeline based on historical patterns and current market conditions. We're currently in the accumulation phase. This typically lasts 2 to 4 weeks after the initial crash. During this phase, prices consolidate, weak hands exit, and institutions build positions. Phase 2 is the recognition phase. This is when the broader market starts to realize the crash was overdone. Technical indicators turn bullish. We start seeing higher lows. This phase typically lasts 3 to 6 weeks. We're likely to see silver test $30 to $32 during this phase. Phase 3 is the explosion phase. This is when silver breaks resistance and makes new highs. Based on historical patterns, this should occur within 60 to 90 days from the crash date. That puts us in late March to mid-April for a potential breakout above $34. Phase 4 is the euphoria phase. This is when silver makes headlines again. Mainstream media covers it. Your uncle who's never invested asks you about silver. This is typically when silver reaches $40 to $50 based on current analyst targets. The key level to watch is $34. That was the recent high before the crash. When silver reclaims that level with conviction, the next stop is $40. There's very little resistance between 34 and 40 based on the technical chart structure. Now, let me be clear about the risks, because I'm not here to sell you hopium. I'm here to give you the full picture. The biggest risk is continued dollar strength. If the Federal Reserve maintains hawkish policy despite Trump's pressure, the dollar could rally, which would pressure silver prices. However, given Trump's political capital and his willingness to replace Powell, this seems unlikely. Second risk is a broader market crash. If the stock market enters a severe bear market, there could be margin call liquidations that temporarily pressure all assets, including silver. However, historically, silver has decoupled from equities during dollar crises and outperformed significantly. Third risk is a resolution of geopolitical tensions. If trade wars de-escalate and global uncertainty decreases, safe haven demand for silver could moderate. However, the structural supply deficit and industrial demand would still support higher prices. The bottom line is this: no investment is without risk, but the risk-reward ratio for silver at $28 to $30, given the historical pattern, technical setup, and fundamental backdrop, is extraordinarily favorable. This is the kind of setup that only comes around every few years. Here's what you need to understand. The crash everyone's panicking about, it's not the end. It's the setup. The Federal Reserve conflict pattern has predicted every major silver explosion for 15 years. We have the technical confirmation, we have the institutional accumulation, we have the fundamental supply deficit. All three components of the pattern are in place. Smart money isn't asking if silver will explode. They're asking how much they should accumulate before it does. The 2020 rally saw silver gain 150% from bottom to top. The 2011 rally saw gains of over 400%. We're not talking about small moves. We're talking about life-changing wealth creation for those positioned correctly. The signal everyone missed is flashing bright green right now. The question is, will you see it before the crowd does? Because once silver breaks $34 and makes new highs, the easy money will be gone. The institutions will have their positions, and retail investors will be chasing prices higher, just like they always do. This is your moment. This is the pattern. This is the signal. Don't let fear of the crash blind you to the opportunity it created. Make sure you smash that like button, drop a comment with your thoughts, and subscribe, because we're covering every single development in the silver market as it unfolds. The explosion is coming. The only question is whether you'll be positioned for it.